This is a quick update on the highlights of Q4 2022 from a multi-asset perspective. The final quarter of 2022 proved to be yet another challenging one. Although most markets ended off November in the green, most of their gains were given back as the year came to a close. It's no surprise that high inflation was still a common theme. However, the US did start to show signs that inflation may have peaked and is on its way to moderating. We can't ignore the fact that we've had one of the most aggressive hiking cycles by the Federal Reserve, which persisted well into the fourth quarter, albeit at a slower pace. The Fed hiked a total of 425 basis points in 2022. China started the reopening of their economy after almost 3 years of strict lockdown measures in an attempt to achieve zero COVID cases across the country. By looking at our asset class views for the fourth quarter, we remain bullish on South African equities and bearish on developed market equities. We moved into a bearish view on US bonds, but took off this position and shifted into a neutral view at year end. With regards to the Rand, our view shifted into a stronger bullish view on the basis of it being strongly undervalued. Many investors must be quite relieved that the volatile year of 2022 has ended. A new year, 2023, means new opportunities and challenges. The steep rate hiking cycles that we've experienced potentially mean a slower global growth environment ahead. However, there is an extent to which this has already been priced in by global and local asset classes. The market and the Fed expect a slowdown in rate hikes, easing up the pressure on the SARB as well, which would benefit global equities, the Rand, and the bond market. China's easing of their zero COVID policy paints a rosy picture for demand in the months ahead. On the other hand, it might pose a threat to inflation abating. Taking all of this into account, we continue to be cautious of the persistent uncertainty that lies ahead, but we will also be seeking opportunities to capitalize on.